gain of nearly 0.5%. In terms of stock-specific action, you had Tata Power, Tata Motors and IndusInd Bank that led the charge in terms of the gainers today, while Cipla, L&T and Bajaj Auto were a little bit weak. Among the volume movers, Reliance Power, Bajaj Hindustan, the entire sugar pack for that matter, was buzzing in trade today, and DLF also was up nearly 5% is what we noticed. All right, let's try and get some perspective on the markets as well. Samir Dalal of Dalal and Sons Stockbrokers joining in. Samir, thanks for taking the time out today. If you look at the way the markets have really been panning out over the last couple of days, they've been impacted by global markets here. Going forward from here, do you believe that could change? How are you placed when we talk about the market outlook from here?
Yes, global markets have had a very, very big impact, and they will continue to have an impact on the Indian markets. So, one of the things that is a big change is the crude prices, which have come down so much. Now, a lot of the countries that were investing in global ETFs and spreading that money around were these sovereign funds which were loaded up with this extra money that was being generated because of the high crude prices. Crude prices lower and lower means their budget deficits are going to be more skewed, which means they're going to have to pull more money out to match that kind of budget deficit situation, which means liquidity in the global markets is going to continue to remain a little weak. Now, China also is having its own set of problems with the currencies getting devalued a little bit. There's a fear that the slowdown is far, far more than what is actually being discussed. So these factors are going to keep coming up. These factors are going to have an impact on the market, and the markets are going to remain under some pressure in the near term. Now, having said all of that, I'm not saying that India is a problematic market or the story should be forgotten altogether. No. Yes, the near term is weak, but there are a lot of positives. We have to focus on those positives for the Indian market. Which are the sectors, which are the stocks that will benefit from those factors, and that should be an opportunity to invest when the market's correct.
All right, Samir, hold that thought. Now, global gurus believe that the trouble goes beyond China. Both Hugh Young of Aberdeen Asset Management and Bill Ross of Janus Capital say the slowing global economy is a graver concern at the moment. In fact, Hugh Young also says the current volatility offers great opportunities for investors.
Times like this give rise to opportunities for the long term. While people are panicking and seeking an exit, that's where the patient money can make money. But it could well be painful for the following few months. It's only sort of a few years after you find out whether the decisions were good decisions or not. The real broad picture, broadly, is that the global economy is not doing very well, and ultimately the big QE measures taken over the last quite a few years have not worked. So that I think is a real big disturbing backdrop. The gyrations in a highly speculative retail-driven market such as China are really a sideshow to that.
The global economy is still highly levered, and central banks are artificially elevating prices and keeping interest rates low. Central banks are writing endless checks of trillions of dollars and supporting stock markets, and ultimately you can make the argument that they don't run out of cash, and I guess you could, right. But it produces distortions in the global economy. China is an artificial market. All global markets are artificially based, and to the extent that we have a catharsis, I think depends upon central banks basically giving up in terms of what they do. It's up to the central banks basically to save the day or prevent a catharsis, and I think they will.
All right, now what comes as a result of further turmoil in global markets? The Indian crude basket has fallen below $30 a barrel. Experts, however, believe that the basket's low levels will not last for long. Well, now, the drop in oil prices is clearly hurting upstream oil companies. And, well, ONGC says that every $1 per barrel drop in crude prices will drag its revenue down by nearly 900 crores. A.K. Srinivasan, Director of Finance at ONGC, also said the company will now be forced to adopt cost-cutting measures in a bid to maintain profitability. Listen in.
Definitely there is a challenge for the company now because low crude prices are going to definitely hamper our revenue streams, and for every dollar change in crude price, we have an impact on the top line about 900 crores, and on a post-tax basis, the benefit which we gain is about 5 for a full 1 year basis. Definitely the challenges are high. Now company has to prioritize most of the jobs, look into the cost-cutting mechanisms so that we are still able to maintain profitabilities at a respectable level. Up to Q3, my realizations were up. And in the current year, if the prices are still going to continue at the same level, the average realization should be in the same range, around 30-35.
All right, now the government is betting on low crude prices to deliver a windfall in the next financial year. Sources say that the finance ministry is likely to fix the LPG and kerosene subsidy outgo at 20,000 crore rupees in the upcoming budget. Tvesh Mishra joins us with the exclusive details. Tvesh.
Well, yes, we have been picking up from our sources in the Oil and Finance Ministry that the subsidy outgo for the coming fiscal will be capped at 20,000 crores. Now, we need to remember that the current subsidy outgo is hovering around 30,000 crores. So far as the crude prices is concerned, they have gone down considerably for all practical purposes, going down to below half what they were a year back. What also remains to be seen is how upstream players such as ONGC and OIL will be dealt with. What we have been picking up from our sources within India's oil ministry is that they expect the price of crude to remain below $50 per barrel, thereby translating into no subsidy payout for ONGC and OIL. So far as the government's fiscal subsidy is concerned, that component will be capped at 20,000 crores. Back to you.
All right, Samir, now when we talk about the oil and gas back here, what are your thoughts? Because clearly ONGC has been a stock that's been showing some bit of traction, but beyond that, Reliance Industries also has been quite a bit of an outperformer recently.
Yes, the oil and gas pack has been under some pressure because of the falling crude prices, like you rightly said. And Reliance has outperformed, but Reliance is, the percentage of oil and gas production is a very small component of his overall business, right? Plus, again, I keep saying this time and again, is markets are forward-looking in nature. And what they are looking forward to is you're going to have all your capacity, which you've put in 1,40,000 crores for the petchem business. You're going to have an additional 70,000 crores which you put into the telecom space, all starting to generating revenue for you, right? Which has actually not happened. Now, for the first year, yes, because the utilizations will be low, because of operational efficiencies not being in place, you will see some hit. But markets are now beginning to look beyond that. The markets want to see how the profitability would probably look in not FY17, but maybe FY18 and FY19. And they're trying to extrapolate what should the price be at that point. So Reliance has been moving more because of, I think, the launch of the telecom space. I think they've been moving more because of the the new capacities coming on stream. Now, coming back to the oil pack, like you said, ONGC has been struggling, and that struggle for ONGC, KN, Oil India is going to continue as long as oil prices remain low. The question here, I guess, for them to ask is how long can the prices remain at these levels? Let's be honest, at $30 a barrel, nobody's really going to be able to make too much money. Shale gas in the US is going to they've already faced a lot of losses, and the losses are only going to keep increasing. So eventually, oil prices are going to bottom out. They are going to move up. So maybe you're getting, if you want to take a small amount of a contrarian play for the next 1.5 years on the oil space, KN India and ONGC might actually be good bets. When prices move up, you will probably be able to get that right, because these stocks are trading at very, very attractive valuations. There is space for them on the upside, but you have to wait for the bottoming out of the oil prices.
All right, Samir, hold that thought. Now on to another exclusive. Sources tell Bloomberg TV India that Roads Minister Nitin Gadkari has finally given a go-ahead to the Bharatmala project, seen as one of the government's most ambitious projects. Chetan Bhutani is here with more on this. Chetan.
This ambitious road program called the Bharatmala Pariyojana, costing to the government about 2.67 lakh crore rupees. Well, the Roads Ministry will now go ahead and issue the draft cabinet note because the committee of secretaries that met on December 7th, which was chaired by the cabinet secretary, gave a go ahead to the Roads Ministry to take this proposal to the cabinet further. So the government plans to complete the Bharatmala project by 2022. Really a very ambitious timeline that the government plans to complete the project, because what all the Bharatmala includes is a very, very huge task, considering it completes the pan-India coverage. So basically, development of state roads along coastal and border areas, 7,000 kilometers, costing to the government about 80,250 crores. Backward areas, religious tourist places, connectivity, 7,000 kilometers worth rupees, about 85,250 crore rupees. Setu Bharatam Pariyojana, construction of 1,500 major bridges, 200 ROBs worth rupees 30,500 crores. District headquarter connectivity, 9,000 kilometer worth 60,000 crore rupees, and Char Dham connectivity, improving 900 kilometer worth of roads for Char Dham connectivity, will cost the government about 11,700 crore rupees. So now a very ambitious target that the government is setting for completion of Bharatmala project. Well, we'll have to wait and watch till about the timeline that the government sources are indicating to me is like 1.5 months, because all the stakeholders will subsequently reply. Roads Minister Nitin Gadkari is very confident of getting the cabinet clearance for the Bharatmala project.
So this entire space has been pretty active when we talk about the road sector itself. Any thoughts there? Any stocks from that space that you'd be looking at?
So the road space by itself doesn't excite me, because a lot of the debt is there in these books. But some of the EPC players who execute the road projects, which do not own the road projects, those might be an interesting play. It needs to be seen who wins these road projects, who execute these road projects, what kind of remuneration, what kind of projects, would they be PPP, or would they be annuity basis. So all of these, you cannot just generalize. But looking at the whole picture, look, the government seems really, really intent on getting the infrastructure spend to get going from their end. They've had a big benefit in reduced subsidies, which has allowed them to free up some amount of money which they can spend for some of these activities. I mean, today when we talk about green shoots in the market, which everyone discusses, one of them is the railway side, right? You have 1 lakh crore investment that's going to happen from the railway ministry every year. You have these ambitious road projects which are coming up. You have individual road projects coming up. You have irrigation projects which the government is working on. You have Andhra Pradesh by itself, wanting to set itself up as a massive state, move forward in that space. So there's a lot of money going to be spent for infrastructure. So yes, they are going to do well. Pick the companies with low leverage in the balance sheet, or relatively lower leverage in the balance sheet. Pick companies which have good scale. One of the companies that has actually been correcting a lot over the last maybe week, actually last little bit of time, is Larsen & Toubro. I think the correction to some extent is overdone. This is one of the companies I'm actually quite bullish on from a longer term point of view. The way I look at it is, if I'm buying Larsen & Toubro today at under 1,200, I'm looking at a probably 1.5 year target of maybe 1,600 and plus 1,600. There's some amount of fundraising that will happen by Larsen through sale of L&T Infotech. So things are there. I mean, they're going to get their orders. They're the market leader. They will get their orders. So companies like L&T, some of the other companies, less leverage. I mean, they don't come to mind at the moment, which they are. Maybe Ashoka Buildcon, which has some amount of debt. But companies like that would be the serious beneficiaries going forward.
All right. In fact, talking about L&T itself, L&T has been in focus today as its hydrocarbon consortium has backed an order worth almost 2,500 crore rupees. We spoke with Subramaniam Sarma, the CEO and Managing Director of L&T Hydrocarbon Engineering, and what the oil slide means for the company's order book and if the tensions in the Middle East will affect business adversely. This is what he had to say.
You don't take a short-term view, you take a medium, long-term view in this kind of industry, and definitely there is going to be generally, regardless of the demand side, there is going to be always on supply side some erosion in the capacity. So I believe that there is going to be a bit of wait and watch game, maybe 6 months later, maybe for the first 6 months, 9 months, people would like to shift their projects to the right and see where it bottoms out. And then immediately after that, I would definitely expect that the capital will start flowing in and the project pipeline will increase. Most of of the Middle East revenue is coming from the jobs which we have already previously bagged. So I think we haven't won anything recently. Though there are many projects we are bidding for, and there are quite a few in the pipeline. Depending on how the Indian market grow, I mean, there are a lot of prospects in the fertilizers and the refinery sector. There's quite possibility it may get skewed in the short term towards India, or if we win more projects in Middle East, then it might get skewed into Middle East side.
All right, now Bloomberg also learns that IDBI Bank has appointed advisors for a $564 million share sale. The bank has appointed Bank of America, Citigroup, Credit Suisse, Deutsche Bank, HSBC Holdings, IDBI Capital Market Services and SBI Capital Markets as advisors. The fundraising will help IDBI Bank bolster its balance sheet as it seeks to rein in bad debts. All right, some of the other interesting bit out here has been what's been happening on some of the broader market stocks as well. What are some of your topics from that segment?
Yeah, hi, I actually can't hear you very clearly. Can you repeat that question, please?
Sure. Samir, what are your topics right now from the mid-cap space?
So in the mid-cap space, one of the stocks that we are actually quite bullish on is a company called Manappuram Finance. They were traditional gold loan funding, gold loan financing, collateral as gold. Now they are diversifying themselves. They're getting into housing finance, they're getting into commercial vehicle finance, and they've bought a subsidiary called Ashirwad Microfinance, which will help them get into the microfinance space. The company has about 3,000 branches, and those branches will be used as a point to generate business for the commercial vehicles business as well as the housing finance business. So scalability for both these businesses is quite good. At the moment, the housing finance book as well as the commercial finance book is a very small book. So opportunity for growth in that is quite good. Now, the reason the stock has actually underperformed over the last couple of years has been the fact that the gold loan business has not been growing a lot. With gold prices correcting, LTVs being brought down, it's had a kind of impact on them with total AUMs and loaned out coming down. Now this is reversing, this is moving up. So I get a feeling Manappuram is one of the stocks I think which I quite like from the mid-cap space. Another company which recently we heard news of was Shrey Infrastructure. They've done the right deals. They've managed to sell off a tower asset of theirs which will allow them to get about 1,000 crores of the capital back in addition to 1,200 crores of debt repayment. That aside, they've done another deal recently where BNP Paribas will be taking 5% stake in the parent company of Shrey Infrastructure, shares which are already owned by Shrey, and against those Shrey will get the 50% interest of the Shrey Equipment Finance business. Now the consolidated entity together is quite has a decent loan book, about 27,000, 28,000 crores exposure. So if I look at it, I think there's a little bit of undervaluation there. The market has really not understood the value of the deal that has been done. I get a feeling there's more upside there. Yes, the stock has moved up from 40 to 60, but I think you could probably see the stock at about 85, 90, so that's interesting. United Phosphorus is another company, which we think has good potential on the upside. The agri space has been badly impacted for the last couple of years, for the simple reason that monsoons have not been up to standards. We, in fact, even in the February season had off-season monsoons which affected the crop cycle. So UPL in India, which caters to a lot of these segments, has had a bit of a tough time growing. They also have an international presence, and that too in places like Argentina and Brazil, where the currency has been very volatile. So they've actually had a little bit of a struggle there. But all of those things are put into the price. Now going forward, as the agro sector continues to grow, and which is something that is required in India, you're going to see more penetration from companies like UPL in India, rallies maybe. So UPL actually is one of the stocks we have identified. We have a good upside potential for that. And there are a whole host of small mid-caps we've identified, but I mean to get into each one of them right now would be a difficult kind of task.
All right, no worries. Amit, thanks so much for taking the time out today and sharing your thoughts and perspective on the markets and some mid-cap ideas that you're looking at as well. All right, up next, one of India's best-known fund managers, Prashant Jain of HDFC AMC, remains optimistic on Indian markets, believes that the current fall presents a buying opportunity.
I'm quite optimistic, and I would look at this fall driven by China as a great entry point.